Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to talk about the US dollar index ahead of the FOMC rate decision. This evening, we're going to talk about what are the key levels to watch out for that could be broken, could be tested, and what direction do we think the dollar could potentially go. Now, obviously, this is a speculation rather than full prediction here of what could happen. But there's a couple of scenarios which I think could play out. Now, what we have seen with the Fed recently is the fact that the inflation rate has started to decline, which is a big positive for the Fed. You know, they want to get inflation down to 2%. Okay, so their battle with inflation, I'd say, at the moment seems to be on the downward trend, okay, which is exactly what they want to be looking for. And that's why we're going to see a 25 basis points hike this evening. The reason why we're going to see the 25 basis points is because the Federal Reserve want to almost save themselves from having to hike aggressively. So if they hike 50, it gives them less room to be, well, the word that they're using a lot is flexible, okay, with rates. Now, the reason they want to remain flexible with rates is in case inflation begins to rise again. Now, one reason why inflation rate may continue to start turning back to the upside is because of the employment rate or the unemployment rate. Okay, now the reason why I'm saying that is because unemployment is still fairly low. Okay, I think the last unemployment rate that came out was around about 3.5%, and in the latest non-farm payroll figures, we're forecast to come around a similar rate, which is actually quite low when you look at sort of 2022 stats till now. So the unemployment rate being low means that there are obviously more people in work, which could then in turn see people spend into the economy, which then in turn could create more demand for products and things like that, which again in turn increases the inflation rate. So they're saying that they want to stay flexible in the markets, and that's why we're only going to see 25 basis points hikes for the next sort of couple of meetings as we head towards sort of 5 to 5.25%. Now, the only thing that's a little bit worrying is if we actually look at sort of the inflation rate across other countries. We actually saw the inflation rate in Australia move higher recently, so that would be a little bit of a concern to the Fed if they're looking at other countries' economies and they're seeing that the Australian dollar is still showing that inflation is increasing. That could maybe want to see the Fed act a little bit more aggressively, or let's just say, I think if they talk about the sort of the unemployment rate being a problem in this meeting, and the fact that they need to remain flexible in case they need to hike more aggressively again, I actually think that will see the US dollar rally. Okay, the reason being is because if they're going to have to hike more aggressively, the dollar typically benefits off the back of that type of news. So looking at the chart here, you can see we're approaching the 101 spot 50. If we reject that area and the dollar turns bullish today, we could see 103 spot 75, or if it's a big shock, we could see the 105 spot 50. On the other side of this, if the Fed say that they are sort of that the inflation rate is in a good trend, that they are happy where the inflation rate is at the moment, and they can see the fact that the trend for the unemployment rate is also about to sort of move higher, things like that, then I actually think the dollar will probably weaken off the back of that news, and we'll probably see price trade down to the $99 area. But it's really going to be an interesting evening, considering especially the FOMC press conference. Keep your eye on that. Maybe have a little look at the sort of data coming out of there. But the press conference is going to be something of real interest this evening, because it will give us an insight to what the Federal Reserve Chairman is looking to do next. But I actually think we're more on the side of this at the moment, just because of where the sort of unemployment rate is at the moment. It's not really increasing. The recent NFP, or the upcoming NFP, I should say, data isn't really shocking to the markets in terms of forecasts. So, but it'd be interesting to see if the Fed shed any light on that, if they do see the trend for unemployment rising. That could be negative here, and it will allow them to basically keep rates around about this 5% mark, rather than if the unemployment rate is staying low, there may be around sort of a hike in rates towards 5.75%, maybe even 6% could be on the cards in the future. So, anything where they say we're going to be closer to 6%, I think is going to be fairly positive for the dollar going into this evening's meeting. Hopefully that made sense. If it did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.